All right, what's up, y'all? And welcome back to APT. Today in this video, we do something a little bit different. All right, I've gotten a lot of questions recently. All right, and I love that. I love the questions, right? I need to know what you guys want to talk about, right? That's how I can better help you navigate these markets, right? But I've gotten a lot of questions about last week's trading, right? Friday when we were live executing. And more specifically, I've been getting more questions about trend lines in the Fibonacci retracement. All right. So today in this video, I want to do a deep dive into the Fibonacci. All right. How I use it, what I'm actually looking for when I see it, first of all, why we use it, right? That's most important because until we understand why we're using a tool, we're going to use it wrong, right? So I want to talk about why we use it. I want to talk about what it does for me. And I want to talk about how you can implement it in your trading. Okay. So if you're new to the channel, you already know over here at HPT, we collect data so you don't have to. And let me just show you a little bit about that, right? So we actually run a phenomenal trading group, all right, called HPT. And over here at the High Performance Trader, it's my goal to give traders way more confidence, all right? I want traders to be able to navigate the market and understand completely what good opportunity looks like and what it doesn't. All right. So over here on our Discord, I have been collecting data on one approach for the last 18 months. All right. So I've been trading the exact same approach over and over for the last 18 months. And this is the new data report right here. So I just made a video on this. So everybody on the team, all you got to do, once again, is come over to the channel, HPT Cross, click it, and you get complete access to this data report. Now, if you are not on the team, all you need to do is go to my website, which is in the link below, and it's going to bring you to my website where you opt in. And all you do is give me your first, last name, email, and I send these to you weekly. All right. So this is last week's data report. This was the trade we took on Friday. And once again, you can see here, I highlighted the Fibonacci. All right. The Fibonacci is a phenomenal tool. All right. And once again, it serves one major purpose, and that purpose is just to help us identify opportunity. All right. So that's what we're kind of going to be covering today in this video. I want to break down the Fibonacci. I want to break down how we use it, why we use it, and when we use it. Okay. Because at the end of the day, these markets, they're filled with just crazy amounts of, chaos. And it's up to us to understand what the market's telling us, right? We got to understand the chaos. We got to know what we're looking at. And the Fibonacci is just another way to do it. So this is last week's data report. And like I said, we just went through this. I just posted a video on this, but this week had phenomenal opportunities of our strategy. So if this is something that you're interested in and you want to get data reports sent to you, once again, click the link below. I send you weekly data reports, and I also send you a mini course on this strategy. So let's just be clear what I'm not doing. I'm not going to tell you that this strategy is perfect because it's not. All right. I'm not going to be like, oh my God, trade this strategy and your whole life's going to change, right? That's not the goal. The goal is to teach you something that's going to help you understand what you're looking at. It's going to help you understand what good opportunity looks like and what choppy markets look like, because that's what it's all about. All right. And you see here, we're currently sitting at a 70% win rate trading the HPT crossover, which is made up of 3 very simple steps. All right. So with that being said, check that out. It's a phenomenal resource. And without any further ado, let's just break into the Fibonacci. All right. So the Fibonacci, what is it? When do we use it? Why do we use it? All right. So to be extremely clear, when we are trading, okay, and the market opens up, contrary to what many believe, it is our job to do what? Identify opportunity. Okay? We have this market, it opens up, and it's very clear. It's very easy to look at this chart and go, yeah, I went long right here because X, Y, Z, right? But to actually know in the moment before it happens, that takes a different sort of perspective. It takes a different sort of skill. Okay? Most individuals are going, all right, I watched a video last week on YouTube and it told me to buy low, sell high. So just buy the low. Well, how do we know when it's the low? How do we know the market's going to shift? What do we need to see in the moment to actually pull the trigger and take advantage of opportunity. And that's why I found an HPT, right? I needed to bring more clarity to myself and to the world on what opportunity actually looked like. So let's go over Friday's trade. More importantly, we're just going to kind of run through the process of how we were able to identify the opportunity. So every single day, I do the exact same process. Okay. My process is very simple. And I would argue until it's simple, you are not going to get the results you want. All right. It cannot be complex. I'm not trying to hate on other strategies and concepts, but I see a lot of stuff on social media and it is so damn complicated, right? Inversion, divergence, fair value gap, 15-minute London high session, this, that, like, and I get it, right? Like, and if that works for others, that's great. But for me, it's got to be simple. I got to be able to look at this chart and go, okay, where's this opportunity, right? Like, let's get rid of all the noise. So for me to do that, I want to read the market like a book. Now, for me to read the market like a book, I need to identify the key levels, okay? Price is going to react to certain levels a little bit different than others. So what I do every single day is I identify the five main pit numbers, okay? So pit numbers come from the pits of Wall Street. So back in the 80s, before computers, before all these beautiful stuff that we have today, traders literally just worked in a room. And all they had was yesterday's high, low, open, and close. That's all the information they had. So there was a lot of volume around these levels, okay? And institutions and large banks and individuals with a lot of money, they follow where the liquidity is. So the liquidity is going to be at the previous day low, right? Look at the volume. All right. Look at the volume here at the low. Previous day open, right? Once again, look at the volume at the open. Previous day high, look at the volume here at previous day high. All right. And now previous day close. All right. So this is going to be the closing price of the previous day at 4 o'clock. So these four main levels, they're going to help paint the picture, okay? Because it's my job to identify the opportunity, all right? So once again, if I'm looking for the opportunity, I got to watch the correct level, right? Like Todd said in the chat, I got to figure out who's got the ball. Do buyers got the ball or do sellers have the ball, all right? So once again, step number one, and I'll just put it right here so we all see it. Oh, snap. Hold on. Right here, we're going to go step one equals identify. Oh, snap. Hold on. I want to make sure you can actually see it here. Let's put it right here. Step one equals identify pit numbers. Okay? Identify pit numbers. Your pit numbers do what? Tell the story. Okay? I got to understand the story. The market is a book. It communicates to us through market structure, through RBI, GBI, through Fibonacci. Okay, so we have these tools to help us better understand the market, right? And that's what's key. That's how you want to look at it. That with you maintain that perspective, you're going to be able to navigate the market a lot better. All right. So step number one is identify the pit numbers. Okay. So now that we understand the pit numbers, we got to go. Okay, market's going to open up. We're opening up right next to PDL. So once again, I got to find opportunity. So for me to do that, I'm going to do what? I'm going to play some scenarios over. All right. It's going to be a bullish scenario and there's going to be a bearish scenario. There's always both. Okay. Never go into the market thinking, oh my God, it's going to rally. Did you see what China did? Or, oh my God, it's going to sell off because did you see what Trump said? Right? Like all that means nothing. Okay. The market doesn't care about your opinion, and it sure as hell isn't going to let 90% of the world have an edge just because they heard some news, okay? So got to be clear here. What you may think or assume is hurting you, all right? I've literally seen large cap companies, Apple, Microsoft, Google, have great earnings and sell off the entire day. Okay, so once again, just to be super clear here, the news means nothing. Your opinion means nothing. The market's either going to go up or down. We just need to identify which way it's going to go. All right, so cool. Step number one, identify the pit numbers to understand the story. So when I'm coming up with my pre-market plan, okay, and the market looks something like this, I go, okay, there's going to be two scenarios. This thing's going to go up or it's going to go down. So I like to go, if it goes up, where's it going to go? Well, it's going to come up to this pit number, or it's going to come up to this pit number, or it's going to go all the way up to my bull target. This is going to be our bullish scenario. Okay. If buyers hold this, I'm going to then target the upside. If sellers hold it, we're going to target the downside. Okay. So once again, pre-market, very simple. A lot of people complicate the pre-market plan. It is not your job to complicate it. Complication does not mean better. It just means you have less clarity. Okay. We got to keep it simple. So now that we understand that, we're going to now allow the market to tell us who's got the ball. All right. So once again, if you go over to my website, it's going to really break down the strategy for you. All right. I have a simple 3-step approach that helps you understand who's in control of the market. All right. Step number 1 is identify the key level. That's your pit number. Step number 2, I'm looking for a moving average cross. Step number 3, the most important part of this strategy, is the RBI, GBI. Okay. So this is what we're going over. If you want more details, just click those links. So the market opens up. All right. And if you watch the live, you'll notice here, I'm doing nothing. I'm literally doing nothing while price is printing. I'm just running over and I'm going, okay, who's got the ball right now? Okay. Did buyers got it? Do sellers got it? Now, for me to understand who's got the ball, I need to see one of these. And this is the $1 million candle that's going to change your life. Okay. This right here is called the red bar ignored. Okay. This is the RBI. All right. Red. Wow. I butchered that. Okay. Let's try that one more time. This is the red bar ignored. Okay. The RBI. All right. Josh, what is this though? It is a red candle on the 5-minute time frame that gets disrespected by the following candle. All right. So once again, this guy, red bar, 5-minute time frame, gets obliterated by the next candle. You see how this high is not as high as this candle. This means that these sellers are not as strong as these buyers. So what it helps me understand is that buyers are showing strength beneath the line, right? Like, because this chart doesn't necessarily look bullish. All we know is we got a low right here and it keeps being respected. But I get an RBI. So at that moment, I understand buyers got the ball. Now I need to spot the opportunity. This is where the Fibonacci retracement comes into play. All right. So hold on. Give me a second. There it is. Okay. So this brings us to our Fibonacci. Okay. Hold on 1 second. Right here. So I understand the story. We just got a very large push to the upside. Josh, how do I know where to get in? Great question. This is where we use our Fibonacci. Okay. Fibonacci is actually a mathematical sequence across the universe, not just the market. Okay. Where the sum of two things are equal to the next number. Okay. So without going off the deep end into Fibonacci and all the cool stuff that it does in the universe. Okay. And you guys probably seen it, right? Let me, I actually want to show you. Okay. Hold on. Let's do a little deep dive into the Fibonacci sequence right here, because it's actually a really cool concept. So the Fibonacci sequence is a series of numbers where each number is a sum of two preceding ones, starting from 0. All right. So a mathematical equation, it looks something like this, right? And if I blow this up right here, you'll notice the Fibonacci sequence is in everything in the universe. All right. It's literally, it's not just the market. Okay. It's a pattern that is spotted across the whole universe. Okay. In the solar system, in the stars, right? In your hand, in your body, in nature, right? This is what's really cool. Look at this in nature, right? So the Fibonacci is like, it's a mathematical equation that keeps repeating. And it's all over the universe, right? Like, look at the star constellations, right? The petals on a flower, a cloud, right? A sunflower. It's really cool. But what it is is a pattern that can give us an edge in the market, right? This is how it's used in nature. This is how it's used in the market. I'm going to use it to identify opportunity, okay? So when I get a large move, all I'm going to do is go, okay, here's the low of that move. Here's the high of that move. All right, guys, this is really simple stuff, okay? When I want to get into the market, I don't know where to get in. So what am I going to do? Whip out my fib. All right, now let me make sure you guys see this. I'm going to right click here, add drawing, and I'm going to grab the low, and then I'm going to grab the high, okay? So, and what this is going to do is plot the 50% point. Now, the 50% point becomes the reference point, okay? If buyers are going to maintain control, they are going to control that 50% point, okay? Price rallies up, price comes into the fib, and we now have ourselves what we like to call opportunity, okay? Using the Fibonacci, right? It's the best way to look at it is it's there to help you measure the strength of the previous move. All right, the market's here to reach new highs, reach new lows, and we need ways to measure that buyers are actually still got the ball, right? There's nothing worse than getting into a trend that's not going to continue. And there's many ways to use the Fibonacci, and that's what we're going to be going over today in this video. All right, so give me 1 second here. Okay. So that's how we were able to use it Friday. And what was actually cool about Friday, if you guys go back and watch it, or if you were with us, that actually was just a little bit more confirmation on my, so I already entered into the trade. I entered into the trade on this candle, right? On this candle right here, we actually came down, tagged the 2-minute 20. So I entered in long, and I wanted to put my stop loss around open print, okay? So that was my entry. And then I zoomed out on the 5-minute, whipped out the fib, and I realized the Fibonacci was right there. So I then added into the position and was actually able to capitalize on a really good move to the upside, right? So that's really how you use the Fibonacci, all right? That was one example this week. Let's look. Because the Fibonacci is actually a tool that can help you get into trades multiple ways, all right? So let's take a look at this one. So anytime I'm looking to identify an opportunity, all right, let's talk about this move right here. Once again, look at it as a reference point, okay? Every time we're going to use the Fibonacci, what we're really doing is just identifying the 50% retracement, okay? So as price is selling off, we have ourselves a nice move to the downside right here, okay? First thing I do is grab the low, or I'm sorry, grab the high, and then I grab the low. We got this nice move. Let's say I'm not in this trade, but I want to get in a trade. I want to spot some opportunity. I'm going to then go, hey, let's see if sellers can defend the 50% fib, all right? Price comes up to the fib right here, and boom, buyers start to muscle their way through it. Now, this is very important because if sellers were strong, they wouldn't allow that to happen, okay? So let's just see what happened once buyers took back that fib. Boom, price starts going up, right? So once again, it's not just a tool for a continuation. It's also a tool to help you spot a reversal, okay? And it doesn't just work on an intraday trend. It literally, you could use it on one candle, right? Like, and that's why I was saying in the beginning of this, it's important for you to look at the market like you're just here to spot the opportunity, right? Like you're just here to use the tool to identify who's in control. If you understand who's in control, then you can make better decisions in the market. That's literally what it does for me, right? Like if I'm trying to gauge a trend, I'm just going to whip out the fib and I'm going to go, okay, where's the halfway point? And then I'm going to then make a decision based off it. Let's do a couple more here. This day, what did I do? Came down, price came. Oh, I'm on the 2 minute. That's why things are looking a little weird. Hold on. Oh, let's see. All right, this day, perfect example. Okay, so I think this is Martin Luther King Day. Price is selling off here, and we get this large push up. So once again, I want to participate. I want to get in this trade. I want to get in the market, but I need a way to spot the opportunity. This is where the Fibonacci is going to come into play. Okay, price is selling off, and we get this large move up. So what do? Right click, grab the Fibonacci retracement, and I grab the high and I grab the low. Okay, so let me just make sure I'm getting that correctly. Yes, I got the high, I got the low. All right, it looks something like this. So now price, and now remember here, I'm not just going to full port into the market, right? We have to realize we actually need criteria. We need a reason to actually pull the trigger, right? A lot of us traders, we be full porting just because we want to get into a trade, right? That is gambling. If you want to become a good trader, you actually need something that keeps you from going massively crazy retarded in the market, right? You want to stay, you actually need some sort of criteria, right? So once again, we got this move. Boom. This is the move we're measuring. Why are we measuring this move? Because we're looking to know if it's going to go higher or if it's going to go lower. Okay? It's that simple. I want to know, hey, is the market going higher? If so, I have a lot of potential to make a lot of money. So I want to do what? Cut it in half using what? The Fibonacci. So this right here becomes the halfway point. So once again, I right click. Now I got the fib. So now price just came into the fib, bounced off it, and we got a beautiful RBI. And I just want to show you guys here, right? Because I really like keeping it crystal clear with you guys. I want you guys to really understand this is what we do. So I'm going to show you the call out here. What day was this? This was 119. So if I zoom on over here to the Discord to 119, where we at? 119 right here at 10:26 a.m. longs, small size. All right, this was Martin Luther King Day. So I'm trading one mini, right? I'm trading one mini here, nothing crazy. And look, and ready? This is the call out in the Discord. This is the chart right here. Look where the 50% Fibonacci is. So once again, in the beginning of this video, I said a lot of traders and influencers, they'll already show you what happened. I'm going to show you the decisions I made in the moment. Because I want to show you guys, like, I don't want to just blow smoke up your ass. I want to give you guys tools that you could actually use tomorrow that are going to help you make more money. I want to know if this is going up or down. I want to spot opportunity. So how did I get here to where I'm actually entering into a trade? Okay. Well, number one, our strategy is present, right? What's our strategy? Identify open print. Boom. Step number one, right? So right here, we're going to go OP, open print. Step number two, moving average cross. Okay. So right here, the 5 and the 20 just shifted. So we're going to go MA cross. Okay. Now, step number three, we got ourselves a red bar that's disrespected. It's ignored. So what do we know when we see this? That the odds are in our favor. Okay. We know that there's a higher probability that buyers are going to push price up. But say you want a little extra, right? You want a little more certainty or confirmation or whatever. The Fibonacci is going to help you understand the dominant side of the market. We are going to grab the low, grab the high, and now we have a 50% retracement. Josh, how do I know buyers are actually controlling it? Because the candle can't close below it. See how we wicked into it? Wick comes down, tags the open, right? Once again, it's open print. Why is open print important? Because this right here, this is what we call massive volume, okay? This is what we call large money, okay? This is where the banks are making their move. This is where the banks make their moves, right? Like, there has to be a dominant force in the market. right? The market just doesn't have equals. Like there has to be somebody that takes control and pushes it. So this is where we spot it. All right. We get a beautiful red bar, ignored. So I'm in the market long, stop below it. All right. And then we start to get a crazy push to the upside. Okay. And that's what we got, right? We literally held this trade, price continued up, and we rallied and we had an upside target right there. So there's many ways to use the Fibonacci, right? And once again, like, because I've gotten a lot of questions about it. So I really wanted to be, I just want to clarify. All what it does for me is helps me understand who is actually controlling the trend. All right. Who's actually in control of the market, right? If buyers can hold the 50, it will continue to the downside, right? Like, let's look at this, right? Let's look at this move right here. So on what was this? 1/20/2026, we got this crazy move to the upside. So I'm going to cut it in half. Okay. Look at what buyers do here. They come into the fib and we rally up. They come into the fib and into the 20 and we rally up. Okay. What are buyers doing here? They are controlling the trend. Okay. They are literally, dude, we're getting hammered with so much snow right now. Schools are canceled tomorrow. Classes are canceled tomorrow. Like the whole world's shutting down right now in upstate New York because we're getting literally like 3 feet of snow outside. It's crazy. So basically, remember though, buyers are controlling the trend here. This is how I know buyers got the ball. Now, what happens here? Look at this. Buyers hold it again. We get a push. Now, what happens here? We start to close below it. All right. Is that a sign of strength or weakness? Buyers are getting weak. Buyers are getting weak when we start closing below the fib. Now, that doesn't mean go short. That just means stay patient. And then right here, what do we got? Our 3-step approach. Okay. We have GBI, moving average cross at a key level. Right? So this was a short play we took. So you see how we're using the fib to like, I just understand the story better, right? Like once sellers started closing below the fib, the market started to shift a little bit. Buyers started to get weaker. So once you start seeing things like this, you know that the market's shifting. All right. And it's very similar with trend lines. Okay. Look at this trend line right here. I don't care what anybody says. Trend lines are a great tool. And literally it doesn't really matter. Like to me, it really don't matter how I get into the market. What matters is that I follow it correctly, right? Like if I'm going to use, there's millions of ways to get in and out of this market. Okay. I just need to be able to understand who's actually got the ball and trade with them. That's why we use the fib right there. Beautiful move. Boom. Sells off like crazy. Let's see what else we got here, T. Bam, another one. Let's see. Look at that. So let's just be clear here. Once again, the Fibonacci does what? Does it give us perfect entries? No. I mean, sometimes. Does the Fibonacci help us understand who's got the ball? Yes. Entirely. Right? We got a strong move here off the open. Buyers rally up. We fall below. So what do? We grab the low and we grab the high. Because this is the move I want to measure. Okay? Right here. This is the move. So now price does what? Falls below the 50. And then what do we get? Beautiful. Moving average cross, green bar ignored, short play. Straight down into the lows. This is actually quite interesting. because I think there's something a little more here, Todd. I do. There might be something a little more to this Fibonacci, bro. I'm noticing a lot. Our strategy happens a lot next to the 50% Fibonacci. It's interesting. Very interesting. This might be something that we start to measure on the data reports, right? Like, and what I mean by that is look at this. Every move we got in the morning, once the reversal happens, you cut it in half, and it respected the Fibonacci on the retracement. Every day this week. Look at this. This Martin Luther King Day, right? That first move right here, it respected the Fibonacci 50 for a beautiful long play, right? Then Tuesday, right here, we got a 50% Fibonacci on this move right here. And that's the one that we just went over. And then this day, exact same process. Rally, 50% fib, fall below it, green bar ignored, short play. Interesting. And same with that day, and same with Friday. It happened every day this week. Interesting. Yeah, that might be something we got to do a little more digging on. Another reason why we took that long Friday is look at this ascending triangle right here that we had. That was beautiful right there. Absolutely beautiful. Absolutely beautiful. Yeah. All right. Listen, I just want to hop on and give you guys a little bit more idea, a little bit more understanding on the fib. The 50% fib is it's just another way to spot good opportunity. It's just another way. So I got to go out. I got to do some shoveling. I got to, prepare for this massive winter we got coming. But I friggin' love you guys. I hope you guys have a phenomenal week. Make sure just use your tools, RBIs, GBIs, and make sure you're trading with us every Friday, right? Every Friday we're hopping on here live. Make sure you're trading with us. We've been on fire. And make sure you check those links out below. If you want data reports on the strategy sent to you, just check them out. It's a phenomenal tool, great resource. And for individuals ready to take their life in their trading career that much further, definitely looking at joining the team and push yourself that much further. All right? Love you guys. Take a good one. Peace. Todd, text me. Peace.